That was an interview with Axios on HBO, and the Axios technology reporter David McCabe is with us now. Also joined by Lindsey Bell, CFRA research investment strategist. So welcome to you both. And David, why don't you give us a little context and perspective, if you can, on those comments from Tim Cook. It's significant when you hear somebody like Tim Cook say the free market isn't working.
Absolutely, and this was, as you said, in an interview on Axios on HBO with my colleagues Mike Allen and Ina Fried at Apple Park in Cupertino, California. And Tim Cook made those comments, and in fact, Apple has been staking out this position for a little bit, this sort of, we are different from Google and Facebook. We're not using your data, and so we're okay with regulation, and we actually think regulation might be needed to rein in those companies. But in that same interview, my colleague Ina made a really good point to Tim Cook. She said, well, yes, you say this about Google, you say this about Facebook, but you take a lot of money from Google to make it the default search engine on the iPhone, on the Mac. And his response was essentially, well, we try and mitigate it. But I think that gets at how complicated this conversation about privacy and other regulations are, even for companies that have said, yes, this should happen.
Yeah, he said we try to mitigate it, but first he said, well, they make the best search engine, so we have to go
right, exactly.
So, which I thought was kind of interesting as well. And, you know, Lindsey, to the point that David's getting at, if you're Tim Cook and you're Apple, it's easy, I guess, to call for more regulation when it's the regulation on privacy, data collection that would hurt Facebook, or it would hurt Google, but it wouldn't necessarily do much harm, I guess, to Apple, right? So it's easy to call for that if you're Tim Cook.
Oh, absolutely. It's much easier if you're a Tim Cook than, say, a Mark Zuckerberg, right? So I think, look, regulation, it's already, Europe is really pushing for regulation on these companies, Google, Facebook, and you have the Democrats here really pushing for more regulation. It's a matter of time before regulation gets put into place. The big question is, what is it going to look like? How impactful will it be for these companies? You know, it seems to be that there does need to be some sort of regulation, but to the extent that we can have as little regulation as possible, I think, is important.
Yeah, that's always what business is rooting for. David, from people you're speaking to, what's something that we can not count on, but sort of start to anticipate for next year from the point of view of regulation of big tech?
Yeah, I mean, I think the big question is whether or not the regulation will be enough for Democrats to say, yes, we can preempt state regulation, particularly in California, which has sort of led the way. So I think preemption is the battle to watch. That's sort of the red line. I know in some cases lawmakers have left that out of some draft bills, saying we don't want to touch that yet. And then I think we get to a bunch of other battles, like should it apply across the internet, not just to Google and Facebook, but to brick and mortar stores and to internet service providers, and questions about whether or not what kind of constitutes sensitive data that you might need to opt into the collection of. So we're going to see all of those battles, but at the end of the day, you're going to keep coming back to will they or will they won't preempt California before those laws go into effect in 2020.
That's a very, very interesting point, the idea of federal regulation versus state regulation. All right, we're down 423 on the Dow right now. Lindsey, let me make a final point about Apple's share price. We're looking at it at the bottom of the screen, number of the stats, up 10% year to date, down almost 15% this month. But as we told you a few minutes ago, Apple entered what we would consider bear market territory, off more than 20% from a closing high, and it's in the news not necessarily because of the regulation, but because of these disruptions in its supply chain and the suppliers cutting their forecasts. What do you make of the Apple share price decline?
Yeah, we think that the share price decline for Apple really has been overdone. Look, the supply chain issue is definitely a concern because usually when there are issues with the supply chain, you don't hear about it until January. So this is very early to be hearing about it, and the weakness this early on doesn't bode well for the rest of the cycle for certain. And the big question really is that the weakness has been in the XR, which is the lower priced phone. And if you're not having users of the iPhone upgrade at the low end price, the question is who's going to upgrade next year when they continue to want to raise prices. We do think that their exposure to services, their exposure to some of the higher priced end phones do help margins. But the question is, where's the low end of the market going to go?
So Apple, Lindsey's $186. You're saying Apple's to be clear, a buy here at $186.
We do like it. Look, it's trading at 13.8 times. That's very cheap on a historical basis. If you look at the amount of cash that they have on the balance sheet, they're going to buy a quarter of their shares back every year for the next 3 years. So they're putting a base in this stock. And, you know, their margins are expanding. And Apple has always figured out issues like this in the past.
Lindsey, always good to see you. Thanks for coming on. And David, thanks for coming on again. Good to see you after that Axios interview over the weekend. Interesting with Tim Cook.